This is Justin Pulitzer. This is my weekend review video for Sunday, October 2nd, 2016. It is, however, being shot on Saturday the 1st. A good amount of information to cover. I'm going to start out with a couple of blips on macro, get into the 7 market keys, get into the major market indices, and then hit up some stocks that I think are noteworthy. So we had some economic data this week. GDP got bumped a smidge. Durable goods were flat, but showed some signs of aircraft weakening. It was buffered by some vehicle sales, but really nothing here that's changing in that regard. In terms of the market keys, the VIX is really just kind of hanging out in the doldrums. I had created a key here a while back. We are in purely directional option play mode, not into really selling too much premium down here other than some really isolated situations that when they come up I will mention. So we're starting to make a series of some kind of higher lows, but not really spiking up with higher highs. I think that there was a lot of concern this week with the presidential debate. There was a lot of Fed speak, and then there was the Deutsche Bank incident, which we will cover. When I say we, I mean me. But yeah, so we're in purely directional play mode down here. IV is getting low. Always a risk of it kind of spiking up. I do, however, think we're in one of these periods where we get these kind of blips up and pull back into range. I think that's sort of what is playing out here. And of course, we had one little spike. The dollar. Now, the dollar is important. We're kind of in a bit of an uptrend. I pointed out almost a mini head and shoulders within a bigger down channel. So this had a really big run leading, from 2014 into 15, and it's just been kind of flagging ever since. My thinking on this, though, is if the dollar starts breaking this pattern and getting above the 200 MA and these last highs and breaking the channel, it could be off to the races, and that will not go over well in S&P land. You can see here that you have a fairly narrow band here, so I'm looking for either a breakdown to retest the trend low, with these lows as the reference. This one is 24.56, but I would even use the last 4 days here. This low here was 24.63, so anything below there is probably a quick right or right out short. Anything above the 50 MA here, you've consolidated just under it now for multiple sessions. I mean, so yeah, anything over 24.74 could get a quick pop up to that 200 MA. Whether or not it gets through is another story, but the dollar lower or benign is better for stocks. A dollar rallying is not good. It'll start getting people talking about interest rate hikes. Speaking of which, the bonds are in a bit of I don't want to say a downtrend, but they're in a modest decline mode. I've drawn in a channel here. There's a larger channel, and there is a kind of a down channel within a larger up channel. This held the 61.8 here. You had a bit of a bounce, a look below and fail, which resulted in a retest of the channel high. I'll keep it this simple. Friday's range to me is very important because the 100-day moving average is kind of just below it. So I'll keep it real simple for you folks. Anything above Friday's high, which was 38.64, keep in mind 138.50 is an important level. Anything above that, I think, is higher, and we get a move down in rates. If this, although I will say, if this does happen ahead, of the Fed, I'm going to start thinking that there could be some crisis concerns. So while it's good for the PE multiple premium that I often talk about in stocks, if this were to retest the highs, it'll probably be on something like Deutsche Bank concerns or something along those lines, and the market might not like it right away. Bigger picture, we know that interest rates are a big fundamental piece of the weighted average cost of capital, which is the correct discount factor for discounted cash flow analysis. Try saying that 10 times fast. But lower rates are good for stocks. Higher rates are not. So 100 MA plus is still kind of hunky-dory. Below there, to me, would probably get a retest of these lows, at least this gap fill, but potentially the lows. And a move above would probably get this back up to the upper end of the range in the 141s at the very least. So that is the bonds. So something kind of struck me as interesting, and I was having a couple of conversations with some traders on Twitter during the Deutsche Bank kind of fiasco. And, I notice when anything ever goes bad in the markets or banking sector or what have you, people always assume, I shouldn't say everyone, but many people, many participants, let's use the Fed speak, right? Participants, automatically assume that we are in 2008 all over again. And you could see here where the high yield kind of bond credit is. For you to be in a scenario where there's a potential for a quote-unquote crash, and listen, there is always potential for something horrific to happen, like a nuclear war or something like that, that nobody plans the Inquisition or whatever. No one expects the Inquisition, to quote the Monty Python boys. But in general, you need something like this, where credit is deteriorating, and it's deteriorating steadily and rapidly. We're up near the highs of this kind of move of the range. We're above the 50 MA. We're above a downtrend. I find it hard to think that there's going to be a crash without a credit crisis. And in order to have a credit crisis, you have to have panic or fear in high yield. And we clearly do not have that. So if you start seeing something like this, I would be willing to entertain more the notion of a 2008 type of scenario, but it just doesn't seem that way to me. The banks are much better capitalized, although I do think that they probably are being pushed to do things like Wells Fargo, where they take on more risk or do kind of shady, nefarious things in order to make some money. The prognosis, unfortunately, for banks is negative with low interest rates, and I think the problems in Deutsche Bank are really a kind of same with Wells Fargo. The scandal there and the fiasco that's going on right now with Deutsche Bank, I think, is more of a unintended consequence of ZIRP and NIRP, which is, of course, zero and negative interest rate policies. The kind of the reach for yield type of a situation. So I can't tell you that I know for sure that these banks aren't hiding something on their balance sheet, but it seems more unlikely to me than not. Keep in mind, 2008 started with a mortgage crisis where the lenders were basically fighting over themselves to give away loans, the ninja loans, no income, job, or assets type of loans. I'll tell you just from my own experience a few years ago of buying an apartment, it's real hard to borrow money these days. There's not really too much loose money floating around there. So the underlying rot that was in place for the really it started in 2005, but the underlying rot that wound up becoming the 2008 crisis really isn't there today, at least not in the United States. In Europe is a whole other conversation, but as far as American banks go, I just don't see that being the issue here. Everyone's always looking to fight the last correction or last crash, last recession, and I just don't really see that being the case here. Now, that being said, there's always the concern of counterparty risk, and I think that's really what you saw with regard to Deutsche Bank. There were some reports that came out on Thursday that firms, you could see this problem with Deutsche Bank is not new. It might be being new to being what's picked up by financial media, but it is not new to the market and certainly not new to the stock. Now, I'm going to talk about it technically, what happened here, but I'm going to tell you what the fear was. The fear was what happened to Lehman Brothers and to Bear Stearns, that word gets out that the firm is in trouble, and people start pulling money, the classic run on a bank. And whether or not that is going to happen in Deutsche Bank, I can't tell you. I find it very highly improbable after the 2008 and 2009, crash, that Lehman being allowed to go kind of, I think, scared people. And I just don't see regulators, in a world here where we give 7th place trophies to kids and no one is kind of allowed to fail. It seems highly unlikely to me that Deutsche Bank, which is a huge multi-trillion-dollar balance sheet in Germany, and the biggest bank in the Eurozone, it seems highly unlikely to me that they are going to be allowed to go. The stock could get canceled, and their shareholders could have problems. You could have the proverbial bail-in. But I just don't see that company is going to be allowed to kind of crash and give us the kind of systemic risk that Lehman Brothers and Bear Stearns to a lesser extent did. That's just my take on it. I could be dead wrong, and I know that the political system over there, they're really, even here for the most part, there's really very little tolerance for banks. But it seems highly unlikely to me that this is going to be allowed to collapse. Now, that being said, let's talk about technically what's set up here. You had a precipitous move down, and on Thursday, you had what technically is a look below and fail, and then there was some news on Friday that got the stock higher. This could continue. The rally here can easily continue back up into the 1478 and maybe even catch some legs into the 16s where the 200 MA would likely be, and also the downtrend. We hit a lower, there's a more extreme channel low, and then this is sort of the less extreme channel low, and you can see that moves on the wrong side of it have not been sustainable. So we could have a rally back up. The 100 MA was resistance here. I have every inkling to believe that we will likely see the 100 MA again. Just seems like there could be some more squeeze in here. I know I don't want to use any derogatory language, but not so smart traders were loading up on puts this day, and they're all now wrong. Anyone who shorted 1, 2, 3, 4 days, and even this day for that matter, anyone who shorted within there are wrong. So it just seems to me that there's probably a little bit more bounce in the ounce there. With regard to Wells Fargo, I've done a lot of analysis on this, actually. You can see from top to bottom, peak to trough, you have an $11.02 decline. From this peak, I use the extreme of the range, to this one is an $11.84 decline. This one I don't really count as much because it's still within range. These are range extending moves that I'm talking about. And you can see we are starting to break range here. Now, I always talk about coming down from the top, which we are, the top of the range to the bottom. So I don't necessarily know that we're going to fully fall apart here. There could be some type of a bounce back up into range. But if we are to lose this, the sort of maximum downside that I see, if you were to project these, like a blend of these two down, would take you somewhere between, I want to show this on a 4-year maybe, daily. Look, you have some reference lows in here, and if you project that loss down here, it takes you smack into that range, which basically takes back this entire round. It forms the complete rounded top. So that's my thinking here. Could the stock rally? Sure. It could bounce. Like I said, I'm never a fan of pressing lows after there's been, you've come down from the top. So the ideal scenario here would be for the short, for this to either chop sideways and then go, or to have some kind of minor bounce and then go down lower. But I do think that this could be where we're heading, and I would be interested in selling some out-of-the-money puts, particularly if this really got steep right out of the gate here. There's really no news that I'm aware of right now, although headlines can flash pretty quickly with regulations or lawsuits and so on and so forth, and I'm fully expecting a criminal investigation. It's just too public, and what's going on in Congress is just way too just way too public. I've said for a couple of weeks that this looks like a head and shoulders, a rounded top, a failed check back. I mean, you name it. Not a pretty chart, and I do think that this could easily see that worse kind of scenario, that worse kind of outcome. Yeah. So with regard, let's get back. We got a little diverted there. I'll make a note of that. I always like to put where I kind of talk about these things. For those of you who don't know, if you go down into the description of the video, you'll see in order the stocks I discuss. So let's go into oil. That was another piece of big news this week with regard to OPEC and something that may or may not occur in November. So check this out. Oil has been in a uptrend, but it is in a kind of down channel within the, I guess, uptrend. All right, so, I mean, it's a little bit of a stretch, the uptrend, because we are technically making some lower highs, but these 2 days here are important to me. We're stalled on the channel high. If you clear these 2-day highs, and the high of day is 48.32, I think 49s and 51s and maybe even 52s, maybe even 56s if things get out of control to fill this gap could be in play. If you lose these 2-day low and, the 100 MA, I think that there could be a right or right out short for a move back down to the 50 MA, which would be back down in the 44s. But it seems to me that a lot of people were very bearish on oil, and I drew in here now a head and shoulders. This neckline, or this potential right shoulder here, has held now with multiple lows. I'm thinking this is going to go higher. So a lot of people don't believe that OPEC is actually going to raise pricing or cut production in November. Something a little funny happened, though, on the day that this was announced, and that was the legislation that President Obama vetoed allowing 9/11 families to sue the Saudi government was overturned by Congress, and that is the first time his presidential veto in his term has been overturned. I'm thinking that the Saudis are either being pressured. These are, of course, this is just pure speculation, but I think either the lobbyist groups for like Exxon and Chevron and so forth have done a great job pressuring the U.S. government to squeeze Saudi Arabia to allow prices to increase, or the Saudis are going to try and punish us and the Europeans because Europe and Asia doesn't produce gas and oil like we do. They actually have very little reserves. And that could be used as pressure to kind of right the ship with them. So I'm thinking oil is going higher. Again, that's just, I don't want to sound too conspiracy-like, but hey, you never know. Things could happen. So I'm thinking higher in regard to oil. XLE is doing, I guess, a whole lot of not much. It's just been chopping. I like that this day was a power day. The next day was a consolidation day, and we're above that day. I think XLE is okay as long as it's above this pullback low of 69.03, but take a look what's right below here, the 50 and the 100 MA and the 20. I mean, there's a lot of moving average support below here. So XLE to me just looks like it's going to kind of maybe chop for a while. It's getting a little to the upper end of the range. There's been some resistance in the 72s. I don't know if it'll may resist again because we're kind of coming up, not from the dead low of the range, but coming up. So I like the idea of buying dips in XLE and maybe selling some rips. My favorite of the big stocks is, of course, Exxon. And I had said that we were going to get close to this area here, and it wound up selling off. I talked about selling some out-of-the-money put premium. This is one of those examples because I actually was looking to build a position in Exxon, and I got some off down near the lows here. And I had every intention to add down near the 61.8, near these 81s. So we didn't quite get there. There was the news. So I said on Twitter the other day, I'd rather be on base than not on base, even though it's not going to be as big of a home run as I was hoping. So we are above the down channel now. This was a very big move higher. You had a kind of consolidation day, and now you're above the trend and just about at the 50 MA, maybe a little bit above. So with regard to Exxon, I think as long as this 200 MA here holds, and that will roughly be the pullback low here of 85.68 by the time it gets there, it's kind of okay. If it starts getting below there, this will, to me, have been a look above and fail, and this could come back down dramatically. If this holds and you can stay above the kind of the breakout day, I mean the big, one of my buddies uses a term, he says sellers shut off, meaning you have this multiple move down and then one bar that kind of takes it all back and changes the pattern. Anything above 87.23 to me remains bullish. I'd rather be long than short, and this could easily come back up to retest the 95s, believe it or not. China, FXI is hanging out around these range. It's below the uptrend within the up channel. There's a lot of signs of life in China. Coal has been rallying. Oil has been rallying. These are proxies for global growth. Even stocks like Deere, which I'm not going to cover in this video, although maybe I will if we have enough time, have been looking better. They had good earnings. It had a bit of a pullback, and now it's back up above a downtrend. I'll show it quick. Why not? Quickly. Deere, take a look. I had talked about this. I was looking to be a buyer around the 61.8% fib. It overshot a little bit to the 200 MA and then crossed and has been rallying back up. I have every intention to think that this gets back up to the 88s at the very least and maybe beyond. That being said, benign China, think of this as sort of like the bonds. As long as you're not in crash mode, is benign to the S&P and even positive. So I like this as long as it's above the 50 MA. If you lose the 50 MA and you lose this pullback swing low of 36.91, I think it's a good right or right out short for a play to the channel low and probably the 100 MA that seems to be riding the channel low. It is better, though, that the 200 MA now is starting to flatten out and probably will start bending back up soon. The way I've been playing this has been with the BABA. Let's talk about BABA and what now. I was saying that I thought we would get up to close to 110s. I said I thought 104s. If you remember, I did a very elaborate, I took them off the chart because it was muddying it up here, but I had said 104s, and then if 104s hold, we'll see 110s. We got pretty close, 109.76, and this was 109.87. I could say close enough for government work. So what now? We need to still hold that same level over 104.30. The pullback this day here was 104.57. As long as that holds, I think 110s and even 120s could potentially be in play. Below 104, though, it starts getting a little bit more iffy, and we have to start thinking back down to the hundreds and maybe even the 96s, 97s, 96s. The earnings are coming up here, so I'm guessing that there will, depending on the market direction, there may be a larger pullback. My ideal scenario would be actually a larger pullback. I took a lot off into this move. I would love a 50 MA test, which would be basically the 96s. I think you would shake out a lot of the chasing, and it could set up for a fantastic long setup again. But as of now, as long as it's above the 104.30, the play is for higher. Back below, we start getting a little bit more cautious and iffy and all those wonderful, scary things. IBB. Still holding channel. It's widely, I guess, said by the media that Hillary Clinton won the presidential debate on Monday, although I have proposed that maybe not so much. Every online poll had said that Trump won, and I think the real proxy for the election is coal, KOL. But for now, let's not delve into that kind of speculation. It's not really so relevant. But we have some interesting levels here. You have a backside of an old downtrend line, which is roughly around the 200 MA. I think that that's an interesting level to target if we were to lose Friday's low, which is 283.72. I think you could have a quick trade down to that 100 MA and 200 MA confluence down there in the in the 278s. If you hold here and you get back up above the 50 MA and you get above Friday's high, which is the 290.53, which is above this range high here. We closed Friday just below. So a move back up above, then I think we're kind of maybe off to the races, and a move back up, even potentially to the 315s and maybe even beyond. But that's my play. Long above Friday's high of day, short below Friday's low of day. Let's get into the major market indices. SPY in particular, 9-month daily. Let's bring us a little closer to current times. So there are a couple of scenarios that can play out here. This looked like it was going to close above the 50 MA and the downtrend on Friday. You had a little bit of late selling. It could be because of rebalance. It could be because of the end of quarter. It could be because of a lot of things. But for now, I have to assume that this is a look above and fail. That doesn't mean it's a short right away, but we need to clear the 50 MA. We're still within the confines of a downtrend. So if we can get back up above this day, to me, this is the Deutsche range. A lot of I always love big emotional days when people are afraid or very excited. But I think anything above the 216.87 to 217.12 will fill this gap up to 218.51 and likely retest the old all-time high. So you can see this is in a bit of a narrowing wedge here that should have some resolution in the next few days. The expected move this week in SPY is $2.97. That would roughly take you up to 219.27. If there's a break, that would at least be the 213s. Would be 213.33 to be precise. So that's roughly around these kind of lows, the Fed kind of day lows. So here's the caveat. I talked about the VIX being at the low end of range. When I give you those measured moves or the market maker expected moves, I usually, when the VIX is in the lower end of the range, only handicap that as the potential upside move. If there is a downside move, it could be larger than that easily. I don't know if I've made that clear in the past. I'm pretty sure I have, but I did have that conversation with someone over DM, so I did think it would be good to illuminate that in that regard. So this gap is filled, basically, although it wasn't really much of a gap. I'm looking to see if we can get above these two-day highs for the move up. If we come back down, I think that there's a quick right or right out short below 215.36, which is the low of day from Friday, which would likely, at the very least, have about a buck in the tank, and if it breaks the channel, could even take you down to the lower end of the range. So what's going on here? I mean, we're pretty flat for a while. I mean, the quarter was flat. I mean, it was basically a flat quarter. So I have proposed in last week's video that I think we're going to either break out to the upside and then double this range to the upside, which would be $7.29, which would take you up to 226.89 roughly. Where would that be? Let me see. There's a couple of ways to draw the 1.618 fib extension. One would take you up to 230.59. So there's one at 221, the other at 230.59. The 226s would be somewhere up here. If you were to take this low and this high and then add that on up here, it takes you up to the 226s. Conversely, if we are to fall apart, like if we lose the lower end of the range, and we're coming from the top, so I don't know that an initial breakdown would have as much follow through, maybe right away. But if it were to do it, with some maybe some consternation first, these lows here, once they're violated, it's not going to be pretty. I don't think that this channel low would hold. I was kind of looking for a channel low test here. We never got it. And I think that if you lose these lows, and that's kind of the Fed range move, would be to 212.66. Look what I drew out here. This week shouldn't have surprised anyone, the kind of action we had. I discussed that to expect that. This was the day Yellen really got religious. This was like 3 pressers ago. It had the gap up and then just a lot of chop and range. It wound up resolving higher, then coming back down to the lows and then higher. And it's just been a really, really sloppy situation. So until this kind of resolves to either the upside or the downside, it could just remain choppy. If we were to lose this low and we've already tested now the breakout again, and it's been successful, right? It held multiple times. We came up, higher low here, and now kind of threatening to break. If this breaks down, then I'm thinking a couple of scenarios. One is at the very least, I think we would see the 50% fib, which would take you down to 209.13. Keep in mind, 211 and 210 were very key areas for this market. A lot of resistance there. That could be a move. But somewhere between 211 and 209.13, if you were to double the range, that do the same thing from here to here and project that lower, that would roughly take you to a Brexit type of move, which was this. It would also, like I said, double the range and kind of fulfill this bit of a head and shoulders move down to the 205s. 206.65 is the 61.8 of the range, and you have a 200 MA down here. So it could overshoot. We did that on Brexit. So I'm thinking 205s, 206s, if we lose this range, could be the play to the downside. So I'm looking for a kind of a big move either way. One would be up to retest the old all-time high and then probably double the range higher. Or if there's a breakdown, we double the range lower back down to 205s. There's a gap fill around 203, but I think that this level here is kind of where it would hold. If there's news, maybe it overshoots, but this would be my downside projection. So that's SPY. IWM, the expected move this week is $2 and I don't know, 19, almost 20 cents. I'll keep this real simple. You had 2 days here, mini island reversal, although we've now kind of like basically traded into that range, roughly holding the 50 MA. 1, 2, 3, 4, 5 days worth of trade. You lose those lows on the 50 MA, I think we see the channel low. Let me draw that in. I think we would see the channel low at the very least. If you lose this swing low, this 119.89, then you got some problems because this will start looking like a double top, and you're making you had a lower high, and then you'd be making a lower low, and I think things could get a little bit iffy. Between 117.37 and 120.58, there's a lot of reference levels. Still in an uptrend, things are still okay as long as this channel holds. If you lose the channel and the 100 MA, which is right there, which was the resistance kind of here, held for the most part here with a little overshoot, and you have the channel low in the 100 MA, this needs to hold. If you lose that, I think the 200 will be in sight. I go by levels, and you live by the levels, you kind of die by the levels. Qs. Much better, obviously. I mean, you've had Amazon. I was talking to some people this week, even when the market was kind of faltering, and I'd be like, Amazon's up $10. I mean, the market's not falling apart. So I'll get to Amazon, don't worry. There's quite a lot to say on that topic. Same kind of situation here. This low, 117.15, and the 50 MA are the key. I shouldn't say this low. I'm going to use the 50 MA because you have this this pullback low here. Sorry, 116.55 to the 50 MA. As long as that holds, I think it's kind of okay. You can see I had a bit of a secure low in here, a low, higher low, closed really strong, bookended by these lows. It just seems to me that Nasdaq is holding up pretty well. We're going to know early on this week, I think, with regard to Nasdaq, with where that's going to play out. The expected move is about $1.67. Apple, starting to chop up here. It held at the channel high. I'm thinking it could maybe grind down to the channel low, but as long as it's over a 112.39, it's sort of okay. If this was the day that news came out that they might or might not, there might be some as much as 25% worth of iPhone shortage from the 6S. It seems like BS to me, but who knows? 111.55. As long as that holds, the play is higher. Below there to me is a right or right out short, probably to 109.85, and maybe even as low to the 50 MA, which is riding the channel low. So I'd be thinking channel low. If you get above the high of day there, which is 114.79, then I'm thinking we see 119.75. We'll keep it that simple. Facebook. I don't know what that is. Facebook. Kind of holding a little bit of a wedge. My ideal scenario for this, I always love when there's some kind of chop and then a freak out to the trend. I selfishly would love some kind of a pullback here, close to the 50 MA, close to this breakout 120 and the channel low. That would set up for me as a great right or right out long. But as long as the 50 MA holds, it's sort of not much to see. If you're immediate here, meaning you need to trade this, you're dying to trade this. Anything above 128.33 to me is still kind of has the highs in play. Anything below this sort of 126.80 to 125.75, which is roughly the 50 MA. If you start losing the 50 MA, then I think that play could be down to the 120s, maybe even the 117s. If there's an overshoot, that's 50 and 61%, 61.8% fib, a retracement. I like that for a kind of a put ratio, meaning, buy some in here and then sell 2 times out of the money down in there. Yeah. Twitter, late breaking news on Friday that took the stock up even in after hours, that Google has hired Lazard to pursue the possible acquisition, right? Everyone sort of knows what's going on with Twitter. Here's the issue. The stock in it, the pattern is looking good, right? I mean, it looks like it wants to go higher. There's some, breakdown area reference levels in the 24s and the 29s. So here's the dilemma. The real breakdown in this took place here below these sort of 45s, 46s. That's basically in this kind of IPO range. The low of that was sort of 41s. The high here was like 50. I really think it's going to be hard for shareholders to accept a deal that isn't at least at the 50% fib, which is 44.47. That's just my take. I know that analysts have been comparing this to the LinkedIn deal and pricing it around 25, 26. I just can't see shareholders accepting that type of a deal. It's too close here. So the risk here is, of course, that there is no deal, and in that case, this will come right back down to where it was. And I'll keep it as simple as this. 21.11 was the low of the kind of the news day. Anything below there in this breakout is rather suspect to me. It should not be back down there. As long as you're above the high a day of that bar of 22.89, the play is sort of long. You've had a look in and fail, and you're just chopping. So this, like I said, was up in after hours. I'm sure this will be up on Monday with that news from Google. I do think at some point a deal gets done, but like I said, the risk is that this is some kind of a Yahoo where they get offers and they consider them too low, and you still have the founder in there like Jerry Yang you had then, you still have Jack Dorsey, and they might not want to sell. So that's the big risk with the Twitter. Amazon. This stock has been, this girl is on fire, right? There's that song. I talked about this 1.618 fib extension up at 833.91, and we are a little bit above it. This is getting very steep, and I think that the Idea now is to sort of sell the rips. This has moved a lot. How high could Amazon run? Maybe higher. I think we're getting to the end of the move, though, and I'll tell you why. We got the 1.618 fib extension from this high to from this low, projected up. If you measure from this low to this high before there was a 222 point and change pullback, it was a $411.19 run. From this low down here, what was this, like 285 quarter up to 696.14. If you project that same level up, and I don't have it on the chart, but that would take you to 885.19. So another 40 points or so. So 885.19. If you can stay above 833.91, then I'm thinking 885.19. Back below here, and let's say these consolidation day lows, you see this was like a bit of a dagnabbit. You had a bit of a look above and fail, and then went up. Let's use this low. Anything below 824.63, you can try, I think, a right or right out short. Yeah. So this was clearly run up on window dressing. I really believe it's time to start booking profits up here, and somewhere between here and 885. 885 should probably be the end of the move, at least as far as I would be concerned. Netflix just in a chop range. If this can clear 100.35, then I think it's going to get the gap fill to the 108s. If you lose the low here of the 93.26, then I think you're going to get the gap fill to the 87s and maybe the 85s. You could use the 200 MA here. You see the big breakdown took place from the 200 MA. It's been struggling. Anything above the 200 MA, I like long. Below it, I don't. Google. Yeah, that Google. Consolidating, chopping. Hasn't participated much in the rally. I think it's been digesting this move. This is a textbook island reversal. It traversed the entire range. It's been working off the excess. I do think that this is destined for the channel high. Notice where earnings would take it. Earnings and the 1.618 would be 895.44. Yep, I think that's where we're going. I like it long as the 50 MA holds. We'll keep it that simple. Tesla, I've said for a while, below the 200 MA, I sort of disavow all knowledge. I think that shorts are just going to kind of stay with this because they know there's going to be a secondary to fund the Solar City deal. There's a huge moving average confluence up here. The after hours low was roughly around 216. This is in the 215s, close enough. It's starting to make some higher lows, but maybe on the earnings, this gets a squeeze back up to like these highs in the 230s, which would be the backside of the old downtrend. So short term, I think this is going to be a lot of resistance. Maybe sell strangles. I like out of the money strangles. I think that the thing is just going to chop for quite some time. Acacia, I propose that this could be a head and shoulders. You have a channel low, roughly, a reference low from here, and the 50 MA. 97.02 to me would be a good right or right out long. Below there is not going to be pretty, in my view. It could really pull back quite a bit. So 97.02, right or right out long. A loss of that is GT the FO. Twilio, I disavowed all knowledge of this stock when it got here. I did, however, say that a break of the downtrend would probably get a move back up there. It got even further, a channel high. I'd be interested in this maybe on a channel low retest somewhere in these 58s. It's still holding the 10-day MA, so I'm sort of okay as long as the 10-day is held. If you lose that, you could retest here and test the trend. I think that there is enough interest in this stock that there will be a play on the trend somewhere between the trend and the 50 MA. The ideal scenario would be for this thing to kind of just chop for a while and let this catch up, but that's sort of what I'm thinking. That was Twilio. PayPal, I've been a bull. It's broken a downtrend. It had a breakout, a check back, and now it's chopping. The after hours high on this was 42.88 or 89, I believe. You need to clear 41.5, but if you do, the 1.618 fib extension is up in the 46s. Earnings are coming up, maybe. They had announced this had run up a lot, pulled back. I'm thinking this could see the channel high in 46s at some point, but you really need to clear the 41.5. Until then, it's going to be choppy. I took off some of my trade here. I believe it was 41.10 I was filled, I posted. And then I, on the pullback, sold some out of the money puts. I think I'm short 37s and 38s. So that's the way I'm playing it now, just because I think that there's going to be some chop for a bit. But I would be maybe willing to do a call spread if we do get the breakout. So that's the story with PayPal. Nike, I've been doing a little work on this as well. This sweet little thing here. Let's go back a little longer. Yeah, so this move was $14.55. This move was $13.96. These are kind of close. I'm not really caring too much about this since we're in a range extension mode. So I think 51.48 area should support at least for a bit of a bounce, but I think we could see the channel low if you kind of just do a arithmetic average of these two. That takes you down to 46.08. I don't know when, or how long it'll take to get down there, but I do think the channel low would be an ideal setup. Roughly, look where this low was down here, 47.25. So that kind of lines up well. I'd be into selling some out of the money puts down there below this 50% fib. I do want to be long this for the November launch of their auto lacing light up shoes. I think they're going to be huge. If this doesn't come down and gets now back up above the earnings day, above 55s, there will be a play on momentum to the upside. Then I would say that this was a look below, a few day look below and fail. So those are the two ways I'm looking to play Nike. I got long some SKX this week via short out of the money puts on this day. I have been saying for weeks that I've been waiting for a move down to 51.56 to 20.78. The low of day this day was 20.90. We're now back up, moving. We're into the 20 MA. You have a 50 MA right above. I think this could see the 24s, 25s pretty easily. So this is kind of my target area. Probably take off those short puts if we get back up there. FedEx is a major professional gap, inverse head and shoulders. This could even pull back to the 69s, but as long as this area holds, I think the all-time high and maybe even higher is still in play. Transports have been kind of a thing lately in the market. They've been very bullish. Speaking, I hadn't been planning on discussing this, but I will. CSX, I've been long since the breakout here of the range and the failed head and shoulders. It took some time, but it is looking like it's going to get 2 times the range, back up to the 31.47, and that would maybe be the channel high. The breakdown here came from 31.87, so roughly in this area is where I'm looking to kind of book them dano. So that's the story with FedEx. I want to just add that in. I'll end on the last one, this Ameritrade. I like the pattern here. This came up from the bottom and now broke out. This is on the Scottrade potential acquisition. You filled the gap. So I don't think I would chase because you're onto the channel high. But if this were to pull back and maybe fill the gap here or get to the channel low, I like it for right or right out longs. I like the consolidation pattern. So not looking to chase here, and you're getting into some reference supply, but I would like this on a pullback to the channel low. Anyway, that's my story. I'm sticking to it. I'm surprised I got this done as quickly as I did. If you're not following me on Twitter, my handle is @JustinPulitzer. If you like this video, hit the thumbs up. I believe it's in the lower right below the picture. Be sure to hit the subscribe and the little notification so you get notifications when I post new videos. So let's have a great week, and cheers.